everybody, and welcome to another episode of the Male Perspective. I am your host, Lana Reid, and today I have with me the guy everybody wants to talk to. He is the man everybody needs to know information from. This is Mr. Charles Reid. He is the CEO of GetPayroll. He's a CPA, and he's the author of the book, The Payroll Book. And I got some questions for him today. But first of all, welcome to the show.
Thank you, Lana. It's a pleasure to be here. Thank you for having me.
Thank you. Now, we've got only 30 minutes together, and I do have a whole bunch of stuff to ask you, so I'm going to just get right in here. We are in the middle of this COVID-19 pandemic, and it has created a whole cluster of questions, not only for businesses, but the individual as well. So I'm hoping that we get opportunity to talk about both of those issues today. But the first thing I want to ask you, in the news currently, is this topic of payroll tax deferral. That's like the buzzword right now.
Exactly.
So if you could please explain that to us and why it's a good thing or bad thing for businesses, individual, or what it's all about.
Well, the problem, let me go through it. It's designed so the employee can defer the Social Security tax, or 6.2% of his payroll normally goes to Social Security. This executive order by President Trump allows that to be deferred for the rest of the year, but it then has to be paid back by the end of May next year. So it's basically a small loan to the individual. Okay. There's a real problem with this, though, and it's from the employer's side. The employer is responsible for paying it back. If an employee leaves the company,
okay,
after he's taken the deferral, the employer is still on the hook to pay that money. And if the employer doesn't pay that money, then they'll get hit with penalties and interests on that unpaid taxes.
Wow.
So it's a small loan, and it's only a loan to the employee. I mean, on $1,000 a paycheck, it's only $62.
Okay.
So it's not huge, and it's limited. Over $4,000, you don't get to take it in a 2-week pay period. So
okay,
it's very limited, and then you have to pay it back next year. So your paycheck will get a little higher through the end of the year and a little lower for the first few months of next year.
Wow.
So it serves very little. I think personally, it was a negotiating tactic on the part of the president to get the Congress to do something.
Okay.
And apparently Nancy now has the House staying in session until they do something.
Okay.
But it really, none of my clients are doing it because of the risk for the employer. And we don't really recommend it to our clients for exactly that reason. If the employee leaves for whatever reason, they quit, they die, they take another job, the employer's still on the hook. What's he going to do? Go sue the ex-employee for that few $100s? But it's still money out of the employer's pocket. I mean, it gets you, and it's not that much money.
Yeah, it's not. It doesn't really seem worth it. Now, you mentioned that I had not really understood that aspect of it. If an employee walks away from the company, they don't have to pay anything back? I mean, they're not obligated at all?
Well, I would assume that if they were sued by the employer afterwards, that the employer would get a judgment for that amount.
Okay.
But you're going to go track this guy down, take him to court, spend money on an attorney, spend time going to court, get a judgment, and maybe not be able to even collect it.
Okay.
You're not going to waste your time on it. You're just going to pay it and eat it and chalk it up to, well, that was another dumb thing I did.
Oh, well, that didn't work. Now, you mentioned that a few companies are deciding not to participate in the program, but does the employee also have the option to say, I don't want to do this?
Absolutely. The employee doesn't have to do it. He doesn't have to take out a loan he doesn't want.
Okay.
Because the taxes are still due. Then the IRS has not issued any guidance on how this is going to be reported or tracked. It screws up the W-2s, the 941s, the 940, your 1040, because your 1040 is designed when you put in the information on income that the Social Security tax on the W-2 is correct. Well, it wouldn't be now.
Okay.
And none of this has been set up, and it will take months
Mm.
for the software companies to get everything up to speed and for the IRS to get everything up to speed, and then it goes away.
Oh, wow. Now, this program or this little piece of legislation, will it tap into Social Security?
In a manner of, yes. Well, to put it real frank, it's Social Security taxes that aren't being paid, and therefore they're not going into the Treasury every pay period, and it has to be made up some point in the future. Now,
Mm.
hopefully it gets repaid next year, but again, how much is not going to get repaid? Nobody knows. And so
Okay.
it will affect Social Security. It'll affect the earnings in Social Security. It affects everything. And
Okay.
it is a executive order. It's not legislation.
Okay. Gotcha.
So it's
Understood.
just Trump used it as a tactic, and you know,
Okay, understood. Now, another thing that we had happen with COVID-19 that helped out businesses, and it's kind of a mixed bag of things because I'm hearing so many different stories about it, but is this PPP program.
PPP program, Payroll Protection
Okay.
Program,
Okay. So,
acronyms, yes.
yes. So I hear some people weren't getting it. Some people that get it blew it on things they didn't need to buy. It's just you just hear so many conflicting things. So, is it really helped? What's going on with the whole thing?
It really helped. It was an SBA loan that's forgivable.
Okay.
So uh, millions of businesses took it. We actually took one ourselves.
Okay.
Uh, and what it allows you, it's money that you got from you got it from a bank. The SBA guaranteed it to the bank. So the bank, as long as you were legitimate, didn't mind loaning it to you because they got a fee from the SBA for distributing the money. Now, this is, as I was talking about with the deferral, the PPP program changed every week for about 3 months. Okay. First, it was only going to be 8 weeks. Now it's 24 weeks, and the dates changed, and the amounts changed, and the availability changed, and the rules for getting it changed. This changed constantly. The SBA was constantly issuing new instructions. Now it's set up where after you've gotten the PPP loan, now you can't get them anymore because that's over. It has to be either repaid or it has to be forgiven. It
Okay.
can be forgiven if you have payroll. So if you have payroll in the 24 weeks following when you got the PPP loan, that loan is forgivable and you won't have to pay it back.
Okay.
There's a push in Congress to make every loan under 150,000 automatically forgivable.
Okay.
Okay, and that's fine. Yeah, some people did. It was supposed to be used to keep your payroll up, keep people employed.
Okay. So, are those the only requirements for it to be forgivable?
The only requirement is that you have to have payroll. Now, you are able to spend a percentage of it, and that percentage has changed on rent, supplies, and other things. But I think it's 70% has to be payroll. In the beginning, it was 100% payroll, but they
Okay.
kept changing it. So the rules changed. And if you have any real questions, the SBA has a whole list of FAQs out there that you
Okay.
can look up, or your bank can send them to you, that
Okay.
wherever you borrowed the money from. But most of it has to be payroll, and it has to be within the 24 weeks after you got the PPP loan.
Okay.
So, if you had payroll, you're fine. If you had other expenses, it may be partially forgiven, even if you didn't have any payroll. But the idea was this is a payroll protection program to
Okay.
protect people, to keep them employed so they wouldn't join the unemployed rolls and suck up unemployment money.
Yeah, that those numbers are astronomical. Our unemployment numbers now. We have a long journey ahead of us as a country. But
We do.
yeah, but talk about some light here. I have noticed, or I have heard that quite a few people have been very crafty, very entrepreneurial during this time and started businesses due to COVID-19. Now, a lot of times we do this fly by night. We don't really have any structure. What tips or plans do you have for the new person starting a business out there?
Well, that's one of the things I go through in my new book, and I know we'll talk about it.
Yeah.
But what entity to choose, how to set things up, and I have another book on starting a new business
Okay.
that's available on Amazon. But you got to be smart about it. You need an attorney. you need an accountant, you need an insurance agent. Okay.
Okay.
You may not use them for much. If you're just starting a small thing out of the house, it's not too big of a deal. But the moment you hire somebody, and then of course, what entity are you going to do business in? If you're just going to go start a business as sole proprietor, which is easy, but you're personally liable for everything.
Mhm.
You're putting your house, your savings, your car, the shirt on your back at risk. That's why there's corporations and LLCs, which mitigate some of that risk. So those are things you want to look at. They're not free. Corporation in Texas is $300 to set up if you do it yourself.
Mhm.
That's the state's fee. But it's cheap insurance, cheap liability insurance. So you want to be careful about how you set up a business. You want to have trusted advisors. Then if you do payroll, frankly, you want to use a payroll company. You know, I'm a big believer in it, but before I ever owned a service bureau, I did payroll and I always did it out of house. I
Okay.
remember when I was a new CPA helping my father create the forms and do it, and he had it all on a paper spreadsheet before they had computers, and it's not worth it. And you'll get it wrong and you'll make mistakes and you'll screw it up, and the IRS is very unforgiving.
Yes,
Now,
indeed.
the IRS will penalize you for anything. Uh, they'll penalize you for things they're not allowed to penalize you for,
Oh,
but they'll do
wow.
it. And if you don't know what you're doing and you don't know how to fight it, you lose.
Wow.
One of my examples is if you take a world-class Brazilian soccer player and you put him on the field with the New York Yankees
Mm.
without any training or knowledge or practice, he's lost.
Yes, indeed.
So if you go, you may be an expert in business, but you go into the IRS arena without being an expert, just give it up. You're better off just to pay what they want before they increase it.
Yeah. I had read a news article not too long ago that the IRS targets the easier clients for them to audit and go after are the low income people, the people who really don't have the money to give if they do get audited in the first place. Is that true, or is that?
No, that makes for good publicity. But I work with the IRS. I'm on the IRS Advisory Council.
Okay.
I meet with the IRS 5 times a year to help them solve problems.
Okay.
And no, they go after where the money's at.
Okay.
They want, if you're making over $100,000 a year, your chances of audit go way up.
Okay.
Okay. If you're making $30,000 a year, they don't want to audit you. Now, do they pick a few? Of course they do.
Okay.
They can't discriminate just because you're poor.
Mm-hmm.
But they go after the money. Your chances, if you're a wage earner making minimum wage of getting audited, are basically zero.
Gotcha.
Okay. If you're making $500,000 a year, your chance of being audited this year are about 20%.
Okay.
Okay. So no, they don't go after poor people because there's no money there.
Gotcha. Didn't make
47% of the people don't pay income tax. So they file them because it's on their W-2, and they'll get a refund, and they'll get their earned income credit and their child care credit and these kinds of things. So they have to file, but there's no taxes to collect.
Okay.
The only thing they audit big time is things like the earned income credit and the child care credit, because frankly, there's a lot of fraud.
Okay.
On the refundable credits, there's a lot of people who take them that shouldn't. Okay. There's a lot of shady preparers that will prepare your return for you and cheat for you and charge you for it. And then you won't find them next year. They'll be someplace else.
Oh, wow.
And that's a OPR, the Office of Professional Responsibility, which is responsible for tracking down those people, is busy and all get out, trying to track down and stop fraudulent tax preparers from teaching people how to cheat on their taxes.
Wow. Now let's talk about the book real quick, because I want to make sure I get to it. The Payroll Book, is it geared more towards the employee or the employer, small business?
This one is geared to the employer.
Okay.
Let's see if I'm getting that right. Yeah. It's designed for small business. It's designed for the under 50 employee business. It's not designed for AT&T or General Motors. It's designed for the guy who's starting out, the entrepreneur, the small business, the startup. It's really for the small businessman.
Okay. Now, when we say small business, and I heard you say the number 50, but is that generally the definition of small business is 50 and under?
Yes, the Department of Labor classifies small businesses under 250 employees or smaller.
Okay. Is
But
there a minimum yearly income or revenue?
no, no,
Okay.
it can be a loss, but it's still a small business.
Okay.
For our purposes and for employment tax purposes, there's a lot of laws that kick in at 50. The Affordable Care Act kicks in with 50 full-time employees.
Okay.
And there's other things that kick in at 100 employees. And I've got a list in the book of all the things you're subject to. Now, if you have one employee, you're subject to minimum wage and you're subject to FLSA, Federal Labor Standards Act.
Mm-hmm.
So, but at 50, a lot of things kick in. So the book's designed for smaller businesses, people that don't have a full-time HR person or a full-time CPA on staff to track these things. This is designed for the small business that gets trapped and hurt by things they don't know.
Okay.
This is a book to put on your shelf, and if you got a question, look it up. And if you don't find it in the book, my phone number's in the book. Call me. Okay, I answer questions all the time. If you just had a question I can answer off the cuff, I do it for free. I like talking to people like you.
Oh,
It's fun. It's interesting. I learn about people and things that are going on and businesses that I don't understand, and they explain it to me. And I go, wow, I find a new way to make a living in this country every day. Okay. And that's great. So if any of your viewers, 972-353-0000,
Awesome.
call me.
Awesome. Now, I want you to give an argument for the up and coming or the small business person. Let's say we have the individual who's been selling candy apples out of her home or something like that. And she's, the one woman operation. Convince her that she needs to hire a CPA. She really needs to get an attorney because, a lot of times these small business owners really try to be jack of all trades and everything, and it's really a disaster.
Well, exactly. And if that candy apple, for God's sakes, God forbid, poisons a doctor's kid or breaks the tooth of a newscaster, the lawsuit is going to be a many, many, many times what it would be had she incorporated or set up an LLC to protect her from the liability. Something, she's delivering it and she runs down the doctor's wife or the doctor, for God forbid, she's going to be out millions of dollars, and it's probably going to take her house, her business, the funds that she's saving for her kids' college and everything else, because she didn't get good advice on how to set that up. Then let's say she employs the girl next door to help her, 2 hours a day, dip the apples and get them wrapped up. Well, now she has an employee, okay? And if that employee trips and falls, she's responsible. She's supposed to have workers' compensation insurance for that accident. And if she doesn't, then she's going to pay all that neighbor's doctor's bills and lost income forever because she's not properly covered.
Okay.
If she goes out and buys the minimum workers' comp policy, costs her $500 a year or something, she's not out anything. Everything is covered by the insurance policy that she's legally required to have.
Okay.
When she goes and files her taxes, filing a corporate tax return is a whole different ballgame than filing a personal 1040. So if she's gotten the smart step and incorporated and then has to file a corporate tax return, she can't do it. It's I'm sorry. If she wants to come back and, take about 10 courses in taxation at college and spend a few years working for a CPA, she'll be able to do it. Okay. I remember the first corporate tax return I did. I don't want to remember it. It was, and I was a CPA. Okay. So I couldn't make a candy apple if I had to. I'd have to go get a cookbook and get a video and figure out how to do it. I have no idea what to do.
Okay.
I can do a corporate tax return.
Gotcha.
Okay. I can set up a corporation. I can do a lot of those things that I know how to do. So do what a business person needs to do what they're good at and farm out the things they're not good at.
Okay.
Outsource things. That's how we make a living. We're an outsourced payroll company.
Okay.
You know, we do people's payroll all day long. I've got a whole group of people. I got a dozen people. That's all they do is payroll. They do it every day. They do it 40 hours, or hopefully a little more, a week. Okay. Why would you think that you can just pick up and do things that people spend their lives learning how to do properly?
Good point.
I'm not a chef. I'm not an auto mechanic. I don't work on my own car, particularly now. I mean, when I was young, I could, but with all the electronics these days, I can't work on a car. Okay, I got a mechanic down the street. I do his payroll. Okay, and he works on my cars. Okay?
Great trade-off.
You know, I've got a company that comes and does the lawn mowing. I've got a company that comes in and washes the windows once a year. You know, I use lawyers. I do my own accounting because I'm a CPA, but I don't attempt to do my own legal work. I have insurance agents that advise me on what I need for insurance. I outsource these things. I believe in outsourcing, of course, but I can't do everything. Okay, I can't. Life's too. You know, I'm trained in a lot of things. I used to be a registered investment advisor. I don't do that anymore because I can't keep up with tax law and keep up with the financial world. So I don't do both anymore. I've got an outside investment advisor that handles my money because I don't have time or the expertise anymore to do it, even though I was trained at it. You got to keep up with it, and I don't keep up with it. I keep up with payroll. I keep up with taxes. And payroll, particularly this year and the last 12 years, changes all the time. And if you're not a professional at it, it's really tough to keep up with all the changes in the laws.
Wonderful, wonderful tips. Now, you CPAs are very interesting creatures.
That's a nice way to put it.
How does one go about finding one of you creatures that fits what you need?
The local society in Texas is the Texas Society, and there's in the Dallas area, there's a Dallas chapter of the Texas Society of Certified Public Accountants. And they'll be glad to put you with, they'll give you a list of accountants that fit what you need. Small business, big business, you know, and so on and so forth. CPAs that specialize in that area. Okay, if you're a restaurant, you can find a CPA that specializes in restaurants. Okay. If you're a candy apple company, hopefully you'll find a company, a CPA that's done that for several people and knows all the ins and outs. Okay. So call the local chapter or call the Texas, the state society. It'll be, you know, look it up on Google, whatever state certified Society of Certified Public Accountants. Okay. Every state has one.
Okay, good. Now, in your book, the Payroll Book, because we are this world of technology, you just mentioned Google, it made me think of it. But a lot of businesses are e-commerce now, and I'm assuming that's a different beast when it comes to payroll and taxes and all of that stuff. Any thoughts on that?
It's not. See, that's the funny thing. You know, I don't care where you live. You still have to pay your federal taxes. Okay. And you have to pay your state taxes, and you have to, every state has unemployment taxes. So whether you work in an office or you work at home, doesn't matter. You're still responsible for all the same laws. There's some tricky things with workers' comp and some other things. If you're working and you're working at the house and you fall and hurt yourself, is that workers' comp? Well, if you're working, it probably is. So if you're on the phone and in the kitchen and burn yourself at the stove, that may be a workers' comp claim because you were working when you burnt yourself. Okay? And so it's covered. Your employer may not like it, and the workers' comp carrier may not like it, but those are things that have to be considered. But as far as taxes, hours worked, pay rates, all those things, it doesn't matter whether you're working for AT&T at the headquarters downtown Dallas or you're working on your phone at the house. You get paid so much per hour or per salary period, and so much taxes come out, and they all have to be reported and filed and paid.
Okay. Now,
So it doesn't make it easier to, from a payroll point of view, it doesn't make it easier to have them at home.
well, we got a lot of transition going on now. We've got people at home. We've got it's just all chaotic.
My staff worked from home for a couple of months.
Oh, so you guys are back in the office now?
They're back in the office. We've got a good sized office. It's fairly easy to social distance and so on. You know, I've got my marketing guy standing over here about 8 feet away watching what's going on and listening, but he doesn't get close.
Okay. Now, before I ask my random question, I want to ask you to explain something for the audience or give some clarity, because you say that PEOs suck. That's what your thing is. So first of all, I'd like you to explain, what is a PEO and why do they suck?
A PEO is a professional employer organization. It's what used to be called staff leasing. Okay.
That Kelly's temporary service or?
No. That's a temporary service where they're just sending you somebody that they actually works for them.
Okay.
A PEO takes the people you've hired and puts them on technically on their payroll. And so they're paying the taxes and depositing it and so on and so forth. The whole point behind a PEO is they're a big organization so they can get better rates on insurance, and then they have HR professionals to keep you from having to have one. Well, in fact, for small businesses, the HR is a very minor thing and normally doesn't come into play. Then the PEOs have very nice insurance policies that cost a lot. They're selling you a Cadillac when you want to buy a Ford.
Mm-hmm.
Okay, and then on top of that, they charge an administration fee for doing this on top of your payroll costs. And that can be extraordinarily expensive. We had a major client in the medical imaging business, and they were owned by doctors. And the doctor had a golfing buddy who was trying to sell him on a PEO. So he came in, made the presentation. We put it all together with the manager of the organization, and the PEO was going to be $300,000 a year additional for 150 people. So $2,000 a year additional cost above and beyond. Well, the PEO didn't get the business, and the doctor found a new golfing buddy.
Understood.
We've never seen a PEO that doesn't cost an employer at least $1,000 per person per year in excess of what they could get if they did it themselves.
Oh, wow.
Use us for a payroll company. We have insurance people. We have workers' comp people we can bring in, partners, get this thing set up and save you. If you got 20 people, we can save you over a PEO at least $20,000 a year.
Great.
So I don't find PEOs useful except, and there is a spot for them, if you have somebody who can't otherwise get insurance. I've seen this twice. We had a client whose national sales manager had terminal cancer. He couldn't get coverage anywhere else. We had another one where the son of the right-hand girl was an active AIDS patient.
Okay.
Could not get coverage anywhere else. They could get it through the PEO, which of course drives up the cost to the PEO and to all the participants in all the other businesses. They're paying for that risk as well.
Okay.
So we're not a big believer in PEOs.
Understood. Now, over there at GetPayroll, do you only service the Texas area, or do you service all of the United States?
We service the entire United States. We have clients in, I think, 45 states currently.
Okay.
I don't think we have anybody in Maine or Alaska. We've had clients in Hawaii, Wyoming. We have a lot of clients in Illinois, California, New York, Florida, Texas, of course. We have them almost everywhere.
Okay. So when they sign on with you, they get a copy of the book?
I will gladly give them a copy of the book. I've got the ones my publisher sent me, and I need to get them out of they don't do me any good sitting in that office.
Yeah,
I'll send you one if you'd like.
Okay, awesome. Yeah, businessman, it doesn't do any good just sitting there. Okay.
Nope.
All righty, Charles. We're going to do the random question, and I want you to tell everybody how they connect with you to get the book, if they need a CPA, if they need your payroll services. But just a lot of information you got. We didn't even get to it today. So let's do the random question here. Let's see what we got.
You know, we didn't, one of the things we didn't get to was how to solve tax penalties. That's a major thing, how to avoid them
Okay.
and how to get rid of them.
Okay.
And that's
Yeah,
what the book that goes into, and that's what we do. We're compliance experts. We fix those problems. The IRS
so
penalize you for things they shouldn't,
like
and if
what?
you don't, and
Because
if you don't,
everybody thinks the
if
IRS
you,
knows what they're doing. So
oh yeah, right. Let me tell you, it's 100,000 people, of which 25% are eligible for retirement, and they're understaffed, and they're overworked, they're under budget, and you got a lot of people that get moved into areas they're not experts at anymore.
okay.
And you know, I like a lot of the people at the IRS. I've met a
Okay.
lot of them. A lot of them are good people, but there's the occasional one
Okay, before I
that
ask
I
you the
hang up
question,
on and go to somebody else.
no, before I ask you the question, let's go through this then. What do you do? The IRS, you get the dun 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 dun, the letter from the IRS,
Right.
and you're telling me now that the IRS is wrong sometimes. So what do you do as a business person and as an individual? What do you do?
Well, first of all, you always answer every letter.
Okay.
Okay. The IRS is not going to call you. Now, they may come and see you on some case with a local revenue officer. Normally, you're going to get a letter, respond to it. If there's a problem, go through it. If there was a mistake on your part, they cannot penalize you for a simple mistake.
Mm-hmm.
They can't. That's the law. But they're going to always allege gross negligence. So you need to know how to tell them it was a simple mistake and stick to the script and force them to do it. You'll send the first letter you send asking for an abatement on a penalty will always be rejected. Always.
Okay.
They never give it to you the first time. So then you go to the appeals coordinator. Then you go to an appeals hearing. You may go to a collection due process hearing. You may have to file a case with tax court.
Okay.
A tax court petition costs you $60, and 95% of all tax cases are settled before court. So these are the things you do. You never let them run over you. You always push back. Be polite. Be rational about it. Don't scream at them. And screaming at an IRS agent just guarantees they're not going to give you what you want. Promise. It's like, yeah, shoot yourself in the head. Okay, go ahead. You know. So and this is the thing we can do as professionals. They know we know what we're talking about.
Okay.
They know we know the law. They know we know the Internal Revenue Manual, okay, that they have to follow, and they don't always, okay?
Wow.
And I know the people at the IRS to call if I have a problem. We had a case, took us 8 years. It was a $95,000 penalty that we ended up getting a $300 refund on, okay? And the penalty was completely canceled. But I had to call basically the head of appeals in Washington to get them to have the right person call me to get this heard and looked at again. And when they did, they abated the penalty.
Amazing. You just assume that the IRS is doing the correct things.
I wish that was true. And for the most part it is, but not always. And the IRS has some proclivities. They always assume that a mistake is gross negligence. That's just how they roll. And you have to show that it's a simple mistake, and a simple mistake cannot be penalized. That's the law.
Okay.
So you have to prove to them that it's a simple mistake. And there is no definition anywhere in the IRS that defines what's gross negligence. So it's a matter of the eye of the beholder.
Amazing.
And they're always going to assume gross negligence.
Amazing. Okay, so good tips. Okay, good tips. And so buckle down, just be prepared to buckle down for the long haul. It's not going to be fixed quickly.
It may take months, it may take years. I've had them take, like I said, as much as 8 years to solve.
Wow. And we're in the middle of the COVID-19 again, bringing that up. I think I read somewhere that they've got tax returns just sitting in trailers that they can't get to because the staff is not in the office. So everything is just on hold.
Last Tuesday, Sunita Lowe, who's the Deputy Commissioner of the Internal Revenue Service, was on a conference call with us. And as of Tuesday, they still had 7 million pieces of unopened mail. Now that's down from 12 million back in June, but they still have 7 million pieces of unopened mail.
Wow.
Returns, checks, who knows? They're pushing to get the checks cashed, but 7 million pieces of unopened mail as of last Tuesday.
Okay. Okay. Well, patience with the IRS. Government is the government. Okay. So here's a random question, and then we're going to see how we can connect with you. Oh, should you put your socks on first or your pants?
It depends on how I'm feeling that day.
I figured.
I'm sorry. Some days.
Was very regimented and structured. You should be able to have that answer, right?
Well, I'm not the typical CPA. I'm sorry. I go to conventions with them, and normally at 8:30 they roll up the sidewalk. But no,
whatever you feel like that day.
Whatever I feel like that day. That's random.
I love it. I told you it was a random question. I love it.
Random question.
All righty, Charles. Tell everybody how they connect with you if they want to hire you or to consult with you for the Get Payroll, how they pick up the book. I mean, just how do we get in touch with you?
The book's available on Amazon. We're at getpayroll.com. It's real simple. That's our website. You can email us, info@GetPayroll, or just go online. There's a chat, and there's all kinds of things all kinds of calls to action. And the phone number is 972-353-0000. The only good thing the GTE ever did for me.
GTE, are they not around anymore?
No, Charles? They're long gone.
In this wonderful world of mergers and so much for not having monopolies, but it seems like we're moving towards that, but that's a whole nother topic there.
That's a whole nother topic.
Anyway, Charles, I appreciate your time today. I had a wonderful and informative chat with you. I learned so much today, so thank you for sharing your time.
My pleasure, Lana.
Thank you. That is all for this week's episode of The Male Perspective. I am your host, Lana Reid, and I will see everybody next time.